Hey guys, hope you're doing well. This is HTrade and I have just finished watching Jayway's new video. Jayway is one of our partner traders and he also has his own channel. So here we go. So I really hope you guys also join Jayway's Discord and Jayway's YouTube channel as well. I'm actually gonna I think with this video I'm going to add Jayway's links in my description there as well. It's an absolute banger video. He made quite a bit of money and he passed his 100k eval and he showed exactly every single trade that he did and why, etc, etc. So I hope you guys will have a watch there. Alright, so after my previous video, I'm actually going to show you guys. So my trading balance is currently 49,726 with 70 cents. So basically, long story short, I opened a new eval yesterday and I actually took 2 losses yesterday, so $250 each. And which is actually perfectly fine because that is the set amount that I have set myself out to lose, the maximum of 500 US dollars. And then I locked myself out of the account. So then I moved on to the next day. And this morning I caught an absolutely beautiful sell trade on NAS 100 or InQ. So basically, let me just quickly, before I show you yesterday's trades, let me show you today's trades, right? So kind of behind like a different way of doing it, but it's fine. All right, so first of all, so what I did was I just, let me just quickly, you see it's an absolutely beautiful trade. It's literally, I took TP in a matter of like 5 minutes and it was full TP. It shows 1.6, but it's actually 2 risk to reward. So I took 500 US dollars here. But let me just show you just a quick replay on what happened. Very straightforward. All right, cool. Have a look here on the right hand side. This is the daily time frame chart. As you can see, overall we are bullish. But now here comes the thing. Here's the thing, right? So we took this liquidity. We actually took this high turning point liquidity here, and price started reacting really weird. Now that is simply because that we have taken a high. So normally when this kind of thing happens, here we take a low, it still goes into that direction, but eventually it makes a retracement. Exactly what's happening here, for instance. We took this low and we slowly started making a retracement. So this is exactly what's going to happen here. It's going to slowly start making some form of a retracement, at least I would say this length here. You see this length before it went down, coming up, may react from here and then go further up possibly, but at this stage it's actually in some form of a range, believe it or not. So daily is bullish, but if we take a look at the 4-hour, the 4-hour is, it actually, the 4-hour ended like this yesterday, which is kind of not 100% bullish, to be honest with you. It's kind of bearish. That's my explanation. So yesterday I told in my previous video that if we close below this area right here, then 4-hour would be bearish. But at the end of the day, price still wants to decide if it wants to go this direction or not. So let me just put this back. So anyways, let's just go back to the daily time frame. So what I did was I marked out the previous daily high and low, and then I also marked out the candle bodies. So yeah, let me just quickly delete that. So the candle high and the candle low, the daily candle high and the daily candle low. This is the bottom candle body high and candle body low. So this is the actual previous day high, and this is the actual previous day low. So now let's go down to the 4-hour chart. So what I marked out here was two things. This 4-hour inverted fair value gap, and then this bearish 4-hour fair value gap. Now let me show you something interesting. What do you see here? If I zoom in as far as I possibly can, what do you see? Do you see this fair value gap here? Right, from candle wick to candle wick with the body in the middle. Right. Did we close here below it? Yes, we did. Did we close below it? Or did we close above it? No, we didn't. Did we close above it? No, we didn't. Did we close above it? What's the answer? No, we did not. No, we did not. Is it still valid confluence that can be used for a possible sell? Possibly, yes. Right. And here's another bearish confluence for our inverted fair value gap. All right. Let's just move forward, right? So this is my higher time frame confluences. Previous day high, previous day low, previous bod, and the daily body high and low. All right. So now we go down to the end of New York session yesterday. And yes, I didn't put my trade there, but it's fine. Let me just show you what happened. So actually, let me show you what happened yesterday. So when I opened the account yesterday, I actually took a break-even trade during London, which was foolish of me, because if you go down to the 1 minute time frame to see what actually happened there, you'd see, yeah, so basically I was just waiting for price to react from that inverted fair value gap, right? Let me show you what I mean. So here's the inverted fair value gap, right? This is actually, this is a bullish fair value gap. Price went above it, price closed below it, price went above it, closed below it, went above it, closed below it, whole time. And not only that, we were busy respecting this 15-minute bearish fair value gap as well. And what started this move in the first place is yesterday we tapped this for our fair value gap here. We closed below it and we respected this 15-minute inverted fair value gap, and price just went down. You see, this is the beautiful thing about higher and lower time frame confluences colliding at the same time, and it usually gives a big reaction. Usually, not always, usually. Remember, trading is always a probability game. It's never a it wouldn't always happen. It sometimes happens, not always happens. So based on what happened in the history. In any case, besides the point, so I thought to myself, listen here, this is a inverted fair value gap. This is a bearish fair value gap. Both bearish confluences. I waited for price to read to tap this area, and I entered a sell, and it went beautifully. I actually looked for my entry model was a 1 minute inverted fair value gap. We actually tapped that inverted fair value gap. We printed a bearish candle after we tapped that inverted fair value gap. This was I entered. This was my stop loss, and my take profit was not really this one here. I think it was to risk the reward here. Somewhere here. It was somewhere below this line. I think it was this red line. Can't remember. But besides the point, so what happened was price went down here, And I de-risked completely. Instead of de-risking by 50%, like this candle here, I de-risked completely to here. And then what happened was price started going up, tapped me out at break even and went down. I almost cried. I almost cried myself. That was, I can't explain to you guys how seriously stupid this was. So let this be a lesson for me to, when I de-risk it moderately. Like for instance, if price goes at least 1 RR, de-risk at least 50% first until price, and then just leave it until price goes lower and you'll take profit. Or eventually when it goes to 1.5 RR, de-risk completely to break even. Not break even from the first reaction, please. Otherwise, you're going to be an idiot like me, get stopped out, and then price runs into your direction, and boom. You would have hit full take profit. So that was the first trade of yesterday's London session. And as you can see, this was actually a very late London session. This was actually... this was literally an hour or something before New York Open. Yeah. But the thing is, that's the thing with the market. The market presents the moves for you. It's up to you if you want to take it or not. It doesn't really matter with what time it is. Yes, you need to be aware of what time it is, 100%. But if the market prints an idea that goes with your strategy, you need to react. And that's exactly what the price did. It reacted, and it actually went down to the current London low. This stupid ass candle, 15-minute candle wick here. It completely went down to test that one again, to take out this liquidity below that candle. How beautiful is that? You see that? You see this stop loss would have easily been here, and you can take it down to here. That would have been an easy 1 to 4, 1 to 5 risk reward trade. Easily. Any case, yeah, like I said, I almost cried because of what stupid mistake I did. Because that was a beautiful trade. Seriously beautiful. Any case, besides the point, so came New York Open yesterday. And I was looking for a sell because, I mean, bearish. You can clearly see bearish behavior here. But one thing I did not take note of is the following. This was the previous daily low. What happened during New York Open? We tapped the previous daily low. We had a monumental reaction of that, literally on the 15-minute time frame. This, do you see this bubble? This bubble is due to volume orders in the market from big institutions and banks, etc., etc. All of those orders at the same time. So every time we get a big reaction like that in the market, like I mean really a big reaction, a big order like this one, for instance, it prints this bubble there. This is on the 15-minute time frame. You'll see even more if I go to the 5-minute time frame. But take a look at these orders. 121,000 orders sitting in this singular candle. And if you take a look on the left-hand side, do you see reaction, reaction, reaction? Do you see? Do you see that? All right, all right. So in any case, besides the point, I went down to the 1-minute time frame. I looked for my sell, and I got an entry. I got my inverted fair value gap entry that I wanted, but I failed to notice this. We took out the previous daily low. We had a monumental reaction of that. We actually printed a bullish inverted fair value gap. So this is a bearish candle, a bearish fair value gap that turned into a bullish confluence. We reacted to that fair value gap. We actually closed above that fair value gap. inverted fair value gap. We tested that for inverted fair value gap. We printed a bullish candle off it, and price just went up. That's it. So I didn't notice that at that point in time. When you are trading, so yes, it may look like completely obvious right now, but when you learn to trade, your emotions will you at that point in time you are looking for a sell because the price is bearish at this point in time. I was prepared to sell. I went like this. All right, cool. I can see price went up here. What is that? What is the I took out my fib tool. So there's the London high. Right? I had drawn a fib tool here up until this low. I said, okay, cool. I can see price is reacting off of the 50% level and the 61, well, close to the 61.8% level. So I was looking for a continuation sell because the 15-minute time frame was still at that point in time bearish. So I got my 1-minute inverted fair value gap. It printed a bullish candle here. It printed a bearish candle here. I went in. It was a perfect CE entry here. My stop loss was here. My take profit was the recent low, etc. And I just got stopped out. Boom, that's it. And then my account got locked out because I used the amount of risk that I did for the day. That's it. Boom, you're done. So I'm explaining you guys this because you guys need to be wake up. I need to be wake up. I need to be more wake up to the higher time frame confluences. If I noticed this earlier yesterday, this is the previous daily low that was suddenly being taken during the New York Open. If I was more wake up, I would have taken a buy with this move going up. I would have looked for a bullish confluence to buy from. I would have 100% looked for a bullish confluence to buy from. So it is what it is. You move on to the next day. And like I said, this morning, so what happened this morning? So if we go down to the 15-minute time frame and we start playing the candles out. So here's my higher time frame confluences. There's my the daily candle body high, daily candle body low, previous day high, previous day low, right? So let's take it one candle at a time. There's the Asian session. We are still in the middle of the New York session yesterday. So we created a 15-minute inverted fair value gap, right? And what happened here during Asian time frames? If we take the, okay, let me just quickly remove the previous fib tool, that one, all right? And you draw a fib. Here, where did we react from? From the 50% level. That's it. That's it. All right. So if you were looking for a buy, what are you looking for? You're looking for a bullish inverted fair value gap, 15-minute time frame. So what happened? Bearish fair value gap, bullish fair value gap, retested, and boom. There we go. Straight to the top. Could have taken this beautiful move here. And then at the beginning of this morning, just at London, well, very close to London Open, actually. I saw there was a bearish, a 15-minute inverted fair value gap here. There we go. Oh, not this one. This was a normal fair value gap. But if you took it off this inverted fair value gap, you would have lost because price just didn't go into my direction. So I was stopped out here. Actually, I actually took a sell somewhere here. My stop loss was here. My take profit was here, I think, if I remember correctly. And yeah, there we go. Oh, that was perfect. I actually sold from this and price suddenly went to the different other direction. Price is going with the flow of this trade. It's going up, right? And it is what it is. I got stopped out. So $250 this morning, stopped out here right here. And Then I waited. Then I thought to myself, listen here, this is still a valid confluence. There's the previous day's New York high. This is previous daily high. So if either one of those confluence are being taken, I'm going to look for a sell, another sell, because this is still bearish territory to look for a sell. The previous day high was taken. Check number 1. For our inverted fair value gap tapped. Check number 2. Now I'm waiting for a reverse. Yeah, I'm keeping an eye on the bullish fair value gaps, right? Close below the one, close below the other. Now what do we wait for? We wait for a retest. I'm going to take out my fib tool, click, click. You can wait for a 50% retest. Go down to the lower time frame. We got our retest actually of that, and I entered the trade. I just entered the trade. I think I went to the 1 minute time frame, and I was looking for a trade here. Yeah, yes, you see, these are my markings. I was looking for a sell from this area because I wanted to wait for this to turn into an inverted fair value gap for price to close below there. And then I'll enter for a sell. And then what happened? Suddenly, one monumental big order came in, but I still went into the trade. And the thing is, my stop loss was much bigger. My stop loss was actually this London high. This high. Right? So there's my stop loss. I did not use the 1 minute time frame rule for stop losses. If it was, I would have put my stop loss here or here, and then I would have been stopped out easily. But due to the size of this possible move, price could easily get here. So I was thinking, you know what? Let me properly plan this trade from the beginning and put my stop loss here and then take 1 to 2 risk to reward, and that's it. All right, so that's what I did. I went into the trade and take a look at this. Beautiful move. Not only did we take our profit, we actually took out the Asian session low. And that's it. And then that's how I got my... So remember, I had a 250 stop loss and I had a 500 take profit, and this now I have a total P&L of 233.80. So, well, obviously minus the commission. So yeah, that's how I got to this trade. So yes, guys, I mean, the previous day wasn't a very good day for me because well, actually 2 days ago, because I lost my account, and I explained everything behind that in my previous video. But this time around, I just need to follow my rules to the letter. I have my stop out rules in place inside my in my trader weight. So my account completely stops out if I take a full 500 loss, and it stops out my account completely if I have a full 1000 total P&L for my consistency rule, to meet my consistency rule. And I have some money that I can use for a New York trade. So now I just wait for New York Open. So that's it. So yeah, I hope you guys enjoyed this video. I am going to now wait for New York Open, and then tomorrow I will give out another video for what happened during the New York time frame. All right. Hope you guys have a good one. Cheers.